Hello traders, welcome back to another video. In this video, we're going to touch on CRT because I have backtested it a lot and I've seen a lot of mistakes that most traders might even do. So in this video, we're going to recap on CRT, how it works, how CRT really works, plus some examples and behaviors that the market might really do. And then I'll show you some improvements and ideas that I have discovered myself, and then how I identify different time frames to improve the entries. Also, we are going to cover the final structure sweep. You will understand why I call this a final structure sweep. We will also cover CRT plus market structure views, and also you are going to understand how to use the trading time frame, the range of that trading time frame, and also we'll do some few back testing on a real market chart. So let's begin with the recap of CRT. So as you already know, CRT works perfectly when you see a bullish candle like this that is very strong to the upside, and then followed by this candlestick here, the rejection candlestick. This will be the range of the CRT. Here you will have this one will be the CRT high, you'll have the CRT low here, then followed by this candlestick. So to properly understand this candlestick, most of the time, if you want to start from the beginning, this candlestick should always be a bullish engulfing candlestick. This will be the engulfing candlestick. You'll just see it. This candlestick will be very strong to the upside, followed by this rejection candle. And it's also vice versa here. You'll see a very strong move to the downside, followed by this candlestick here. This will create a range in between this candlestick. So because on CRT, we have to trade on this next candlestick here to close this range here, you will understand why we have to do that throughout the video. This is just the basic, simple way to understand CRT. It's not that difficult to understand it. So another way is that sometimes this bullish candlestick here will take time to be manipulated on the CRT high here. You might even have the second and the third candlestick here, and then followed by this manipulation. This one is very powerful because it takes time, but it's kind of difficult to trade, but it's not really that difficult to trade after you have backtested this a lot. This one is very, very powerful. Most of the time, you will see that the market is likely to reverse. So even on a bearish side point of view of the market, you'll just see a sharp move to the downside, followed by this one here. Most of the time, sometimes you might even have a one candlestick like this, and then followed by the manipulation candlestick here. This one will be an inside bar. Okay, I hope you understand it that way. So most of the time, when you see a candlestick like this, we will be looking to enter the market because you have the CRT low like this and the CRT high like this. If you want to at least be precise, you can just say this is your invalidation level. Then you will be looking to enter the market long when price trades below this low here, the low of this bearish candlestick. If price do something like this, that means you avoid that trade. Even on this side, if price reverse around these areas, you are not looking to enter the market. You are only looking to enter the market short around these areas here, above this price point here on the CRT high. Okay, so you'll just see, let's see how the market plays out on this one here. So that means here you are not looking to enter the market long because price did not trade below this low here. Okay, Even if price move to the upside, yes, there will be some lower time frame entries around these areas, but because we want to at least make some sniper entries and be precise on our entries, we are only looking to enter the market long below this low here. Okay, like on this side, price did not do the same thing that we have expected to do here. So that means we are going to avoid this move, even if price move to the downside. We are not looking for those kind of entries. Okay, so moving on, let's look at this two examples here. We have this sharp move to the downside and then followed by a rejection candlestick. So if we are looking to enter the market long, we will be looking for the market to trade below this low. When price is moving below this low, you can put an alert depending on your trading platform. And then when price is below this low, let's say we are on the 4 hours. When price is below this low, you can move on to the 5 minutes or even the 3 minutes and then look for an entry. I'll even show you some entry styles to enter the market, some sniper entries, the normal entry. You'll understand throughout the video. So from here, let's look at how the market will play out. You can clearly see that price traded below this low here. This is what we call a trading time frame, a trading range here. That means during, let's say this is the 4 hours, this is the 4 hours candle. During this 4 hours candle, this is where you'll be looking to enter the market long, as long if price is trading below this CRT low here. So then you'll be looking to go long around these areas here. You'll just see the price action behaving in the lower time frame. And sometimes, yes, you can be stopped out maybe 2 times before you can get a perfect entry around this area. Sometimes price, yes, it can give you an entry around this area. Like let's say we have this CRT low. You'll just see the low like this. You'll have the low. And then when this 4 hours candlestick opens, this is the another 4-hour candle. Price will just do something like this, gives you an entry around this area, and then it stops you out, gives you another entry, and then it stops you out and gives you another perfect entry around this area. This is where you'll be looking to go long. Sometimes, yes, price does not even break this low here. Price will just give you an entry below this low, and then you move to the upside. And I don't like to make my target around this high here because price I don't like to just trade one candlestick because price doesn't move in one candlestick like that. If you enter the market around these areas here, at least target price to feel this weak here. I'm not sure. I'm not sure if I have covered this before or not, but you'll understand when we move forward with some examples. It's not even that difficult to see the take profit levels, but you can at least try to make your first take profit around this area here. Take profit here as your first take profit around this, and then you can put your second take profit around this area. The same thing will apply on the bearish side point of view. You'll be looking to enter the market above this area here, above the CRT high. Okay, you can clearly see that this is the same example. It's like the same example. It trades below this low here, and even on this side, you can clearly see that we have um, a sharp move to the upside, followed by a rejection candlestick. So that means you'll be looking to enter short above the CRT high and also on this candlestick. We are not focusing on other candlesticks, we are focusing on this one only. So that means when price closes here, and then move to the upside like this. When it starts to cross this line here, this price point, we'll be looking to enter short until we get a perfect end. It's possible to enter the market right there. Most people don't understand why uh, most traders most traders are able to make some snapper entries. And you can clearly see that if, let's say, you enter the market short here and then you close your entry here, you're going to miss a lot of this that will boost your trading account. Okay, so let's look at some other examples that you can at least try to improve. Here, this one is a normal one. We have the CRT high, and then we have the CRT low. We are going to look to go long below this low. Here we are looking to go short below this high. And this one here, let's talk about this one. This one is like an inside bar. Obviously, it's an inside bar. So you'll be looking to go long on this area here, on this candlesticks open or close, it depends. But most of the time, you choose this candlestick close. And sometimes it can even come to this area here. Obviously, in the lower time frame, price will just show you that, yes, I'm willing to go to the upside. But if not, just focus on other pairs that gives you a proper in. So I hope you understand the basics of how to understand how to use CRT and also how to improve. So if you focus on these levels only, you'll understand how to make those entries very easy. And another thing, this these three examples here can also be used in the lower time frame to make some entries. Okay, so this one here is an inside bar example, but the problem is only one in this situation. Obviously, you can clearly see that most people will look for a sell here. But even if we have a bullish candlestick like this, price can still manipulate the low and then move to the upside. That's why you should understand it, because price sometimes candlesticks, guys, they if you want to understand candlesticks properly, you just use the same color on your chart and then start to read those candlesticks. You'll see the behavior very clearly. But that topic will be on some videos that I have done in my private mentorship. So here you can clearly see that, okay, price manipulated this low here and then closed bullish like this. It did not trade above this high here. And also we have an inside bar. The inside bar, if you want to understand it, is a candlestick that is inside another candlestick that is in range. Like if you look closely, even this one here, this candlestick is inside this candlestick. This is an inside bar. So from here, price just move to the okay. So let's look at another one so that we can at least understand everything. Here, this is a perfect example on how to use the CRT and some ideas that I have discovered myself that you can clearly use. You can clearly see that we have a sharp move to the downside. Also, we have this one candlestick here. Also traded below this low. That means we have manipulated this low and then we have also rejected around this area. So in the lower time frame, that means you'll be looking to enter long below the CRT low and then move to the upside. So here we can clearly see that price traded below this low here and then it shoot to the, and you can clearly see that the candlesticks were very, very strong to the upside until we reach this area of correction. So if we look closely in the lower time frame, you'll see that price action is very, very clear. In the lower time frame, we can clearly see that we have the CRT high. Sorry about that. This is the CRT high. This is the CRT low here. Price, it just came down below this price level, and then very aggressively, you can clearly see that these candlesticks were very strong. And then the market print out a bullish engulfing candlestick. So that means in this situation, you are going to enter the market here and then put your stop loss here. There's no need to put your stop loss here, because if the trade goes against you, you are going to lose more. And then you enter the market here and then you catch this move to the upside. So right now, let's look at different types of entries and confirmations plus time frames. Here, let me start by using the explaining the time frames. You can use this for scalping, even then day trading, but most of the time I like to use it for scalping. We have the 4 hours. That means on the 4 hours, you're going to look to enter the market on the 15 minutes, 10 minutes, 5 minutes. Even the 3 minutes here is possible. If you are trading on the 3 hours, you're going to look for these time frames, the 10 minutes, the 5 minutes. On the 1 hour, you are looking for the 5 minutes, 3 minutes, 2 minutes, even the 1 minute. It depends on which time frame is going to give you an entry or a confirmation candle. So this is your confirmation for a bullish entry. You are going to look for a rejection like this, or you are going to look for a bullish engulfing candlestick like this. For a bearish entry, you're going to look for a rejection like this, or a bearish engulfing candlestick like this. So then, because right now we have entry patterns, let's look at how you can sniper those entries. If let's say right now you have this rejection candlestick, you're going to use a limit order around this area on the close or the low here. Then on the next candlestick, the market is likely to come, and then it will trigger you stop loss here like this. You enter here or here. This is a small drawdown, guys, and then you put your stop loss there. The same thing will apply when you have a rejection candle for an entry to the downside. You'll wait for a rejection candlestick like this. You put your sell limit order here or even here, and then you wait for this next candlestick. And let's say right now this is the 1 minute. That means you have to be fast here, because the market can just do something like this very quickly. And then you enter the market there, put your stop loss there, and then you enter short. You'll understand these things when you move forward with some backtesting. So let's look at a structure plus liquidity, where you are most likely to use this CRT model to find those entries. So let's say this is the 4 hours time frame, and you see that price is breaking this low and then it's printing out this thing here. So here in the lower time frame, you are going to look to enter the market on the CRT low, below the CRT low. This is the CRT high. Then here, this is where you'll be looking to go long in the lower time frame if you are in the 4 hours. When price crosses this CRT low, and then you enter the market long, you target this high. This is not the perfect take profit here. I don't even like it at all. That is why most of the time you see that when I enter the market, I just hold the trade for a very longer period of time. For those who didn't see that, on our previous Telegram channel, I've been holding a trade for more than 6 months. So you have to understand that if you are trading the market in the weekly time frame, there is no need to close on that week. You have to hold that trade. Unless if you are still scared to enter the market, to hold the trade for a longer period of time. But if you keep practicing that, it's going to be very easy to hold trades and then do other stuffs. So another thing that I want to point out is that on this area here we are focusing because this is the 4 hours time frame again. This is the 4 hours. This is the 4 hours. Then on this next 4 hours, this is you are trading candlestick. I hope you understand what I mean right there. But let me give you a perfect view on how to understand. Let's say this is the 4 hours time frame on a daily basis, on a daily candlestick. We have the first candlestick here, the second, and then the third. This is where you make your analysis here. And then when this candlestick closes, this is the time frame that you are looking to make the entry. Because you can clearly see that we have this candlestick here at 8, like this. And then we have this candlestick here at 12. This is where you'll be looking to enter the market during that time frame. And then you hold the market again for this. This one was just a retracement. But then the market will move to the upside. So right now, let's look at some few examples. But before we look at some few examples, I have partnered up with Funded Traders Market. So let's talk about it before we move on to real chart to understand how the market really moves. Okay, let's talk more about the Funded Traders Market. I have partnered up with them so that I can also give you some free challenges that you can still make money off. So recently they have launched the Nitro X here, which is a one-step evaluation phase. And also this is a subscription model, which of course, if let's say right now you are taking the 150K challenge, you are going to pay the 139. The profit target is also very low. It's at 6%. The max drawdown is 3%. And the daily drawdown is 3%. And also another thing is that this is a 100% profit. So to understand this very clearly is that after paying the 139, you are going to take the challenge and then you must meet their requirements. Also, when you pass it, you are going to pay the activation fee and then you have the account. This is also going to save you a lot of money because the reset is unlimited. And then let's say right now, you have this account right now and then you fail to pass it, you are going to reset it for $89. That means you can reset as much as you want until you pass the account. Also, another thing is that the consistency score for most traders that do not understand it is very important. If you check on the consistency score calculator, you have to understand before taking any challenge. This is very important here. And so, in total, let's say you have passed it, that means you are going to pay, let's say on this account here, you are going to pay $264. This is a very good game changer in the industry. So if you want to check it out, the link will be in the description below. And also if you use my link, you'll get a discount. Also, if you follow their Discord and join my Telegram and also my Discord channel, you'll be eligible to win the 5K challenge that I'm going to announce a little bit later on. So if you want more information, the link will be in the description below. And also another thing, if you want to follow my journey, I still have the 50K challenge here. If you want to follow my journey on this one, you can also find my trades on Telegram. So I hope you check them out. So let's move on with the video. Let's start with the first example here, which is the GBP JPY on the 4 hours time frame. So right now, because we can clearly see that we have there a strong bullish move to the upside. So the only thing that we need to do here, we just put a line here. So anything any price action above this line here, we'll be looking to enter short. So we will move on to the 3 minutes time frame, as we said in the beginning of the video. So from here, if price come and touches this line here, that means we'll be looking to go short. And then we can target around this low here, and even this low, or even this low here. So we will wait for price action to come to this area here. Let's move forward with price action and clearly see how the market behaved. And we can clearly see that price touched this area here, but there's only one problem here. You don't have a proper price action here. So what you need to do, when price touches this line here, you can also move on to the lower time frame, like the 2 minutes here. You can clearly see that right now we have the same thing, and then we have the rejection candlestick here. So from here, you can put your entry around this area and then target here. This is a 1 to 7 risk to reward. And also another thing is that you can still put your sell limit order around this area here, for in case if price come and touch that line again. But you can clearly see that it touched that line again around here after price give us a little bit of a drawdown, and then price is starting to move, but it's very, very slow. So it's like this. This is very simple. But if you want more sniper entries, you can still move your entry here. Your stop loss is still around this area here. Then your trade will be 1:29. This is the only way you can try to understand it. If you trade only the retest area here, that means you might even miss a lot of trades, but your entries will be only sniper entries only. So because if we move on to because we have used the 4 hours, if we move on to the 1 hour right now, you can clearly see that this is a sniper entry. I hope you understand what I mean. So let's try to look for another example. Here on this next example here, you can see we are on the gold 3 hours time frame, and you can also see that price also manipulated this previous high here, and then we have this lows here that can be used as our target. And you can clearly see that this move to the upside is very strong. So that means right now we are looking to make some entries above this price point here. So we can move on to the lower time frame. We can move on to the 1 minute and wait for price to come to this price level here. And then if you want more take profits, you can clearly see that our take profit is very, very low here. It's at the lowest price. We can still use this as our take profit level, even this low here, because if we don't take profits, guys, there's no need to trade like that. So that means right now we're waiting for price to come to this area and then give us price action before the market can drop to the down. So from here, let's play it out and see how price is behaving. And we can clearly see that right now, price is touching this area here. But in the 1 minute time frame, there is no proper candlestick to enter the market. Let's move on to the 2 minutes and see. On the 2 minutes, there's nothing here. We don't even have a bearish engulfing candlestick. On the 3 minutes, we still don't have nothing. And then on the 5 minutes, we can clearly see that we have a rejection here. The same thing as like CRT on the higher time frame. And we can clearly see that also price traded above this high here. And then here we can enter the market right there and then put a stop loss. Our first take profit will be around this area here. I'll even show you some examples where price is failing to give us an entry. And we can clearly see that the market is behaving perfectly so. It even made a gap here, even hitting the next take profit here, which is 1:40. And remember, this is gold on the 5 minutes time, you'll be holding the trade for only 3 hours only, and then you take the money and then move on to another pair. I hope you understand it. Let's look for examples where the market is likely to break above that high so that you can see different price actions, how the market is likely to behave, because the market will never give you proper entries as like these examples here, because sometimes the market can be a little bit difficult. So let's try to find that example so that at least you can try to see different market conditions. This example here is a little bit difficult here to understand or even explain, but if you look closely, price traded above this high, and then we have this low here. This can be used as our take profit level here. But if we look closely at the current price action here, you can clearly see that price is trading above this high here, and then it also rejected. So what we need to do right now is to look for an entry in the lower time frame like this. We're going to look for an entry in the lower time frame to sell in this box here. So because we are on the daily time frame, this is USD CAD by the way, we can use the 30 minute. Okay, so that means right now we are looking for an entry when price return to this area. We're going to look for an entry in this box here. So let's look at how the market is likely to behave. The market is pushing down, it's pushing down, but then here, sorry, the speed is too high. You can clearly see a rejection candlestick here. So let's say right now you don't want to enter the market on the 30 minutes. We can still use the 50 minutes time frame to look for an entry, but on the 50 minutes there is no proper entry. Let's try the 10 minutes. We don't have it. We don't have it on the 5 minutes. We have it on the 3 minutes time frame. But let me explain something here. Right now, we have a rejection on the 30 minutes, but here on the 3 minutes, that means if you enter the market right there, you'll be in a loss. And then that means right now, you will wait for another entry, which is right here. Or you can enter with the bearish engulfing candlestick, which is going to make your entry here. So right now, that means we have a loss here, which is around, let's calculate, which is around 2 pips. And then we can enter the market again right there because we are still in a trading time frame. And then the target should be around this lows here. We can target this low here. This is going to be 1:7. And also, when you put your stop loss, also add some spread size around that area. And then the market is moving down. But this is a little bit of a drawdown, but it's only 30 minutes of a drawdown. And then the market is moving to the down. So it all depends on how you enter the market, because if you don't use proper risk management, you might be stopped out here, but you won't even have enough capital to enter the market again to return that loss that you have made. So if we move on to the 30 minutes right now and compare the entries, you can clearly see that on the 30 minutes, we don't have that loss here because we are on the daily time frame. So right now, we can still enter the market right there on the 30 minutes, but right now our stop loss will be very high. I hope you understand what I mean. And also, you can clearly see that we are targeting these lows here. Our first take profit was hit, and then even the second one, we can wait for the third one, which is around this area here. Obviously, you'll be managing this trade properly. And we can clearly see that the market pushed even lower. And if we adjust this by entering the market in the 3 minutes time frame, this trade will be 1:46. I hope you understand what I mean. But right now, I'm trying to find examples where the market is even difficult to understand. Let me try to find that example because this video is getting too long so far. So here is another example. This one is a little bit tricky, but if we move on, we can see we are on the 3 hours time frame. If we move on to the, let's say, the 5 minutes time frame, we are looking to enter the market right here. But as I said before, look close. We have the 3 hours time frame candle here, and then we'll be waiting for this candlestick that is going to open around C. And then we have another candlestick here. So let's move on to the lower time frame and see what's going on. You can see those ranges here clearly. So that means right now we are waiting for this market to give us an entry. Here we have the first entry right there. But it has resulted in a loss because the market clearly moved to the downside. And then we are moving on to the next time frame. Look closely. Price even traded below the previous low. If we move on to the 3 hours time frame again, you will see how the market behaved in this situation. Because most people think that every strategy will work perfectly. So no, you can clearly see that price traded below and even manipulated the next candlestick before the market can move to the upside. Let's move on again to the lower time frame. You can clearly see there's not even a perfect entry, but if you use proper risk management, you can still try to enter the market. I know that sometimes the market can even manipulate 3 times like this. It manipulated this low, manipulated this low, it manipulated this. But it doesn't mean you won't even enter the market. There's a bullish engulfing candlestick here, so you can clearly try to use it around this area here. But you'll be having major losses. The first one, the second one, the third one around here. This one, I won't even take it because I'll be inside this trade. And then we have another entry here, which price moved to the upside. I hope you understand what I mean. Sometimes it can be a little bit difficult like this, but if you focus on the ranges, you'll understand this perfectly. I mean the trading range, like how I did on this one here. So let me try to find another difficult example here, because if I don't show you some difficult examples, you won't even understand this very clearly. From here, I want to show you another example here because I can't seem to find the difficult example. I don't know why, but I'll make another video. So here we'll be looking to enter the market in the lower time frame. Let me do something like this so that it can be clear. Fine. So here, guys, let's say right now you see this structure here. The only thing that you can target as your first take profit is this area here for price to fill this fair value gap around this area. So that means your analysis will look something like, you'll have something like this for price to come and touch this area and then move to the upside. So in the lower time frame, this is your analysis. So we are on the 2 hours time frame. Let's move on to the 3 minutes time frame and see the behavior of them. We have this area. Let me remove this. That means we are waiting for price to come and touch this area here. You can clearly see that we even have a break of market structure, even price sweep to the sell side liquidity, whatever you want to call it. And then you can clearly see that we have price touching this area and then a bullish engulfing candlestick here. But because you guys won't be using the same time frames, let's look at let me say the 5 minutes time frame. You can clearly see that on the 5 minutes time frame, we have this area. We have this area here. Let's say you entered a long position based on this video structure, and then you put your stop loss there and then take profit above. So right now, when the market comes, it stops you out. But Because you know how to use multiple time frames, this won't even scare you. You can move on to the 3 minute time frame and see, okay, I was stopped out, but right now I see a bullish engulfing candlestick. You can still re-enter the market right there. And then you wait for price to move to the upside. And you can clearly see that this trade was very easy to trade, but it can be a little bit challenging if you don't understand how to use multiple time frames. Okay? I hope you understand what I mean. So I hope this video was very helpful to understand. But if you have any questions, please visit our Telegram. The link will be in the description below. You can contact me and then we can talk on more things. And also, another thing is that the PDF of this video will be posted on Discord and even on Telegram. Make sure to check out the link in the descriptions below.